This is Gary Buchanan in downtown Billings with a wrap for a 4-day week that ended today on Friday. The market really got walloped. The Dow had its first 300-point down day since last June. The Dow is down a couple percent today, and it's now down 4.2% for the year. The S&P and NASDAQ also had tough days for around 2 to 2.5%. So now for the third week of January, we're seeing market averages 3 to 4% lower than the beginning of the year. The transports really had a bad day. That would be airlines, railroads, down 4%. What's the problem? Well, at least we know three major events. One was a really kind of a weak earning start to earnings last week. Emerging market debt and currency issues, and then China. So much of the particularly large industrials depend on China. So Caterpillar, for example, had a tough day because of business in China. Microsoft and Procter & Gamble were two examples that actually went up for the day. And then natural gas, and this would be primarily because of the weather, had a 10% up day. So people are using more natural gas, obviously, for heating, and that had a very positive impact on that. Next week, the Fed meeting is probably the number one issue. Ben Bernanke's last meeting and the intro of Janet Yellen. The question that some of the markets have, will a 3% down market, 4% for the year, actually slow down the Fed's tapering issue? I wouldn't think so. 3 to 4% probably won't change the direction they're heading, and that would be starting to take money out of buying treasuries. Next week also, new home sales, consumer confidence, and some real important earnings. Again, I mentioned Caterpillar today. Caterpillar's earnings are next week, and early next week, Apple's earnings. So a tough week, a tough start to 2014, and we'll see if the news can change events a little better next week. Gary Buchanan, have a good weekend.